First things first, green line represents an iceberg a lot more than meets the eye. That's number one. Number two, we had a big pulse order that came in. Big market order turned into an iceberg. Now the market is rotating and chipping away at it. Here's what's interesting. I like to play breakouts when they finally fill this order, boom, they shoot through it. But I don't want a ton of shorts or friends trying to do the same thing with me. Because if you sell it to get short, all right, that's your position. You're short, right? If it lights up red on our OPP, which is other people's positions as shorts, I got too many friends. I don't want a bunch of competition. And so as we rotate this, you see how it moves away from it, moves away from it, moves away from it. And it's not until you kind of flip and go from too many shorts, that's these raw numbers, to flip to get too many longs. And then they're able, let me drive it. You could see that number. Just focus on these two numbers down there. And you could see it have a nice flip right there. Right before it goes down. You have to be ready to get short. You have to be bearish. And now you're able to get short better right before this down bar because you see this number flip. And just get a head start. It doesn't have to go all the way. Let's do it again. It doesn't have to go all the way through that guy, but it's going to give you a head start. Now, what's interesting is once it gets through there, you see the amount of longs that puke with sell stops. That's indicative of these green bars. Generally, when it rallies above it, you got to be careful staying short. When it fills it and hops above it, it's at least temporarily bullish. On this particular day, we were really weak, so it ended up coming back down through it. But generally, when you see this, it does what it just did, and it fills it. If you want to keep it below it, if you're short, if it's as soon as it gets back above it, you got to get out and let it come back and do its thing because it's generally going to do what it just did, and that is, and I'll play it in real time, is once it gets through it, it has some breakout potential, and then all of a sudden it reverses and gets back through where the iceberg was, and it's generally bearish to bullish in that sequence. So you could see he's done 18,962, he's done 2,000, 2,200, boom, he's done. And then as soon as they get back through him, it's right in here, it's generally look out to the upside. That's the way and how you play icebergs.